Hi, welcome to the Market Alert for Monday, the 10th of March 2025. Just before we get into events from Friday, the US have gone into daylight savings, so now you need to adjust. If you trade the Dow, that is, you need to adjust the settings in the Omni Predictor software. You do that by coming into the software, then down to primary trade times, and then adjust the afternoon period there from 1330, which mine is already set to 1500 there, so that this takes account of that change in the hour. Only for the afternoon, of course. The mornings remain the same. Right, let's have a look at Friday and work our way through all of the different markets and see what's happening overnight as well. So Friday, according to the news, stocks suffer worst week in 6 months, and here's why. Stocks suffered their worst week in 6 months as an avalanche of geopolitical and macroeconomic headlines crossed paths with an ugly technical situation. I'm seeing all sorts of videos appear on YouTube about the current and coming stock market crash. Let's wait and see, shall we? Stocks higher but see worst week since September as US growth concerns and tariff uncertainty lingers. And of course we've got the peace deal thing to be signed by Zelensky this week, supposed to be tomorrow. Again, we'll just wait and see. Also, what economic news do we have? We don't have any today, but for the rest of the week it's CPI this time. If you got in the non-farm payrolls, then you get this the CPI followed by that a week later. What else have we got there? We got Lagarde speaking at 8:45 on Tuesday, but that's about it really. So it's the market focus this week is going to be the CPI numbers, or the CPI as they're called. We all know they're just corrupt numbers manipulated to show that inflation is down. But if you go to shadow stats, you will be able to see the real figure of what the inflation is. It's around 10%. John Williams, who has calculated and uses the 1980s maths and items for calculating CPI from there, shows that it's way above what it is. And we all know this when we go to the supermarket on a weekly basis as well. Right, let's have a look at, let me just go back a week and to Friday, if I can find it, the 7th. We had the NFP numbers, didn't we? Non-farm payroll numbers were out, and you can see there they were forecast at 159. They came out at 151. So again, another reason why the markets were all over the place on Friday. So let's move forward and have a look at the Dow. So in the Dow, again, this recovery before the close is what we're seeing at the moment. We're below the 200 MA, but be rest assured they'll try and bring the market back as much as they can. Market also trading down to 89% retracement there and above 78, with the highest volume bar we've seen in this down move. So certainly there's a situation where they're trying to buy the market back here, as can be seen by this green volume. 30-minute chart, so there's the non-farm payroll numbers, market moving down, but it didn't take long to bring the market back, did it? Up to the 200 MA, and then overnight we've got this gap which is now trying to fill at the DP. It needs just to go up a bit higher. If it goes back to the 200 MA, needs to get through this to get through Friday's high as well. Talking about the worst month or whatever in stocks, well, it isn't affecting the German DAX, that's for certain, because looks like we're heading for a new all-time high once more in this market. The market above the 5 MA, despite a bit of indecision on Friday. Just a matter of moving prices up. What I would do is mark from the high to this low and watch the 62, 78 and 89 level. We've got the CPI numbers on Wednesday, not a problem to move the markets higher. The only thing that's going to play against this is going to be the geopolitical events. That's what's going to be an interesting one as far as the market's concerned. Otherwise, there's no reason for them to not move back to the upside this week. 30-minute chart, again, you see a bit of profit taking on Friday morning. US comes out, markets up, and we've already filled the gap as well in the 30-minute chart. So heading back to the highs won't be too much of a struggle for the German DAX, or to the all-time highs that we just looked at there at 23,478. 23,500 is the next upside target, and then on to 24,000 for the DAX. It is insane, but it is what it is. And in the S&P 500, we are below that 200 MA at the moment in the daily chart. 5706 is the support to the left. We have got a cluster of volume, and we're trying to move back up overnight there in the 30-minute chart. In the 30-minute chart, again, same as the Dow, market down, market straight back after the news. Does need to fill this gap that we've got overnight. Markets have dropped. On what news, I do not know, but obviously something spooked the markets last night that they gapped lower, and now they're trying to make their way back to the upside there. In the FT 100, again, we've got some volume, nice volume there with the green bar there. You can see that there, and you can see the buying inside of the red bar there, the green shade. So price is again trying to move back to the upside for the FT. We filled the gap overnight, so say this gap seems to be an interesting one. Something must have been said over the weekend. The FT was very quiet until the NFP numbers on Friday, and then the market has just moved up, and again, like I say, filled that gap overnight at the DP. Just needs to take out the close and the high there. In the US dollar, still finding support. Just move that over a bit so we can see a few more bars. You can see that support there taken from there, which goes back to November with the elections. And it's amazing how the market, or the US dollar, has come back now to that time actually. Let's just have a look at the date. That's Tuesday the 5th. Yeah, so very interesting that we see the US dollar is now back to where it was sort of pre-election. Will the market hold at this level? Well, if not, we've got one down there, a support of 99, which we started off at. But certainly the dollar is very weak at the moment, very weak. We'll see if we have a continuation of war to strengthen it, or we get a peace deal this week, which will weaken it further. And also the CPI numbers as well will have an impact. And in the metals, silver continues to lag. Despite decent volumes, it's just trading sideways there. Will it break to the upside? I don't know. We've got a lot of videos on YouTube talking about mega moves and all the rest of it, but it isn't moving at the moment. So let's see. It will need to break through certainly this high first at 33.36, but more importantly, it will need to break through the 34 level, which you can see in the weekly chart there. Let me just get the price for you there, and that's going back quite a bit now. That's 34.85. It's got to break through that in order to move to the upside, and that was back in October. So we've been consolidating since then, which you can see each week it's just sideways for silver. Meanwhile, with gold, it's completely the opposite. This moving back to the upside. We've got the fibs marked in where the upside target is, but ultimately it's going to be the all-time high and then onto the psychological level of 3,000. Again, you can see this moving back up. Friday was interesting with the NFP numbers, and then this did the opposite, and the market was pulled back as if it was there was no concern, and the interest rates are fine. Which is nonsense, because the interest rates, obviously Trump wants them lower, but gold was smashed on Friday. No surprise there. So have a look at the gold-silver ratio, and this starting to move back up because silver's not being allowed to move to the upside, so we can expect this to go back up to the 92 area. 96 is where I would think it's going to go ultimately before we see any breakdown in the gold-silver ratio and the silver price being allowed to go to 34. That goes all the way back to March of last year. But if we continue, you can see there's that 96 level. So we've got this resistance here that needs to be taken out. But for me, that's where we're going, and going lower in the daily chart as well. That's because of the suppression of the metal price. Right, let's have a look at Friday's market activity. At the moment, we've got a lot of volatility, and this is pre-market volume. This is just after 7 and trading up to the 8 a.m. open. Market very, very interesting at the moment in this hour before the cash. There's it looks like there's not a lot. There is a lot going on, but then when the cash market kicks in, you can see prices trading down to the downside. We don't get any signals at the moment because the volatility is very much increased, and I will do some calculations, see if we can sort that out. But again, you've got the red, the green, all of the levels and everything else to actually see what's going on. Like this bar, for instance, at the low, you've got all of the necessary criteria. We're trading out the low, we've got a spike in volume, and we've also got a retracement there as well. From there to there, it looks around 78%, and then the market reverses off this level and then starts to move to the upside, as can be seen there. And in the mid-morning, the market returning to the downside as Dow futures show weakness. Then we've got the NFP numbers, and there you can see the market spike up with those before coming back below the 200 MA. And again, you can see how this isolated bar volume, the market stops there, and then some buying trying to come in and move the market back to the upside. But you can see how these spikes just trigger certain areas of support and then move the market in the opposite direction. So back to the low in the afternoon before prices pull back, and then they ramp through at 3 o'clock or just after 3 p.m. there, and remain sideways then throughout the evening as the markets come to a close. The US rallying the market to the upside. Whether that was the plunge protection team or not, I don't know, but the Dow moving up moved in the evening. This is unusual as well, talking about an increase in volatility. 200 points to the upside. You don't see that on a Friday evening normally, so maybe something is going on behind the scenes, who knows. But at the moment, prices are up again and heading, let's have a look, see where we are. We've got the low a long way off at the moment for the DAX. The high is not too far away, and then you've got that all-time high sitting up here at 23. There we go. Just move that down so you can see it. 23,478, which is going to be 23,478 is a lot further away than there it is. This line is 23,500. If they have any news, that's where it's going. The only thing is that's 100, 200, but then it did 200 points on Friday night, 250 points to the upside for a new all-time high in the German DAX. Okay, that's it for this one. Quick tour of what's happened on Friday and what's happening overnight, and an interesting week to come as well. Okay, have a great day, and as ever, thanks for watching. See you in the next